Hi and welcome to Basic Candlestick Formation Theory. In this video, we will look at how candlesticks or candle charts are formed. When a candle bar starts, there will be an opening price. And this would be the open for the single stick. The bulls came, pushing the price higher than the opening price, causing the candle to turn bullish. However, we should not judge early, until the close of the candle. This also happens to a lot of beginner traders, chasing candlestick and entering positions before it closes for fear of missing out in a trade. The next moment, sellers or bear entered the market, pushing the price of the stick lower. If you noticed, there is a thin straight line formed on top of the candlestick when sellers push the price down. This is the wick, or shadows, of the candlestick. Candlesticks with long shadows show that battle between buyers and sellers to determine the market price. For this case, sellers has managed to push the price down. Sellers continues to dominate the market. And once the seller pushes the price below the opening price, the candlestick turned into a red, which means it is a bear candle. The colors of the candles are customizable, based on software. To make things easy, green is bull, and red is bear in our videos. The bears are now in full control, bringing the price much lower than opening price. At some point, buyers came back and pushed the prices a little higher. Notice that a wick has also formed at the bottom of the candle. The time has passed and now, the candle is closed. And once the candle is closed, we have the close of the candle. The real body of the candle is determined by the close and open price. Remember that each candle represents a specific time frame, which is selectable from your trading platform. When the close price is lower than open price, we have a bearish candle. The high of the candle is determined by highest price the candle reached before close price. For this case, it's the upper shadow, or the upper wick of the candle. The low of the candlestick is determined by lowest price the candle reached. For this case, is determined by the lower shadow, or the lower wick of the candle. We have completed the anatomy of a bearish candle. Now let's have a look at construction of a bullish candle. The construction of a bullish candle is exactly in the reverse of a bearish candle. We start the market with an open price. This would also be the open of the candle. The sellers manage to take hold of the price, pushing the market price lower than the open price. At some point, the price looks pretty cheap, and buyers came in. The buyers managed to push the price higher, causing a lower wick or shadow to form at the bottom of the candlestick. Not only that, the buyers or bulls has managed to take control of the price, pushing the price beyond the open price of the candlestick. We can see how the color of the candlestick has changed to a green. The bulls now has complete situation of the market, pushing the price higher. The situation is now overbought, the bulls took profit and some sellers came in. This sellers pressed the price down a little, an upper wick or upper shadow has formed at the top of the candlestick. The time frame has passed, and now the candlestick is closed. The close price has been set for the candlestick. The real body of the candlestick is determined by open and close price. For this case, the close price is higher than the open price, thus we have a bull candle. The high of the candle is determined by the highest point the candle's reached. For this case, it's the upper shadow, or upper wick of the candle. The low of the candle is determined by the lowest point the candle's reached. For this case, it's the lower shadow, or lower wick of the candle. We have now completed the anatomy of basic candlestick constructions. If you like these kind of contents, do like the video and consider subscribing, so we can create more videos like these in the future.